All right, guys, it's Paul Singh, the Market Speculator with bullsonwallstreet.com. Today, we're going to talk about relative strength stocks. I'm going to give you a list of 10 stocks you need to be following right now. Let's look at SPY here. Now, we are negative on the market, and we have been negative. Before this pullback even happened, we had gotten very conservative up here. Market breadth did not look good. We've been talking about the trade report for trade report members, and you guys who follow the blog as well know up here we were already talking about being conservative. We got the big meltdown. We handled this very well here. Most people are getting crushed during this period. If you are break even or even losing just a little bit, you're doing better than most of the market. Now, we've had that first leg down. We had a bounce attempt that failed, which usually happens in corrective markets. And our bias right now is a test of the April lows here around 257 in SPY, or February down at 253. We're expecting a second leg down. Nothing is telling us that's not going to happen. But when these corrective moves are happening, I always prepare myself for the reversal. So if we go back here, and you can pull up the weekly here, and if we go back 5, 6, 7 years, basically all of these sell-offs end up reversing pretty quickly. Now, this one does feel a little different. I wouldn't be surprised if we get a bigger move down, but we still prepare for a bounce reversal here, or a continuation of the trend. And what I do, what has worked well over the past few years, is going with the stocks that hold up well through these corrective periods. Those stocks, if the market comes out of this corrective period and resumes trend, will do very well. So I always build a relative strength list. That doesn't mean I'm going to trade it today. It doesn't mean I'm going to trade it tomorrow. It could be a week from now, could be a month from now, could be 6 months from now. But I keep building this relative strength list during this period. And I wouldn't expect it to be 6 months. You know, most of these pullbacks or continuations, trend continuations over the last few years have happened very quickly. But, you know, you can go back to 2008 and it was a long one. So that being said, we build that relative strength list. And now we're going to go over the stocks I am watching here, where if we're wrong and we don't test April or February lows, which stocks can we go to if we recover very quickly and get up over the 9 here, or get up over the 50-day moving average? At these points, I would go to my relative strength list. And 10 stocks I'm watching. Number 1 is Disney. Disney has held up very well. It's actually, while the market is way down here, Disney is near its all-time highs and holding the 9 EMA. So definitely a stock we should be watching here. Lulu, L-U-L-U, while it has pulled back, hasn't pulled back that hard and is still in its uptrend here, and is not near its 200-day moving average. And another key level, it held its gap. This was its power kind of earnings gap play here. Now, if it was really bad and going down with the market, it would not have held this level. I was watching this level very closely, and it has held. Now, if it can get up over its 9 and its 50-day moving averages, that would be fantastic here. So keep an eye on Lulu, especially if the market does recover. HMSY, also here, has held not only its earnings breakout level, but has basically held this consolidation range is here. In here, did pull back below its 50-day moving average, but if it remounts that level, definitely back on trend. We've got DXCM, very similar pattern to HMSY. Watch for the break of the 50-day moving average. Has not broke its earnings breakout range. UAL Airline here, United, also has not broke down below its earnings breakout range, is way above that level, and testing its 50-day moving average and is only 4 points above its high here. So holding up very well. We've got cybersecurity software stock, again, held its earnings breakout level. You're seeing a theme here, basically holding these major levels, and now if it can remount its 50-day moving average, back on trend. Apple, now Apple does have earnings coming up, but looks very strong here. Barely pulled back off its highs and is already back up over its 50-day moving averages. So Apple doing really well. McDonald's broke out on earnings just yesterday at highs, looking very strong. Another one we could go to, Orly here, consolidating at highs, didn't even pull back that much. In a break of all-time highs, I might actually even get into this, even if the market is looking bad. And then Alta as well has barely pulled back here, holding its 50-day moving average after this big breakout here. A hold of this level or a break of 290 sets it up for another big run here. So there you have it. 10 stocks that are holding up well. It doesn't mean we trade them now. I'm actually going to add one more, and this isn't a stock, but a country here. Brazil has held up very well after bottoming. You can see the double bottom here had made a really big run down, but now while the market has been doing this, EWZ has been doing this. So keep an eye out on Brazil as well. So that's 11 different stocks or ETFs that you can be watching to potentially trade if the market recovers here.